The Money Show.
Personal Finance with Warren Ingram.
23 minutes to 8 o'clock, and discussing now how people should take advantage of the current stable environment in South Africa. And, South Africa is enjoying an unusual period of economic calm. We've had no load shedding, and I'm saying no load shedding, touch wood, for more than 100 days. The GNU is getting down to business. Trade and industry is looking good. We're seeing more positive signs that inflation is easing around the world. We spoke about interest rates this evening, and that's also looking good, that those will come down if you've got a bond or a car that you own. So, how do you navigate these waters? Well, joining us is Warren Ingram, who's the co-founder of Galileo Capital and our personal finance guru, as I call you, Warren. Good to chat to you again.
Thanks so much, Ray, and thanks for the compliment. I'll take it every time.
You are a guru, All right. This is a strange conversation because I'm always talking to you about how are we going to survive these choppy waters, but the waters are looking good. So what should we be doing?
It's almost unbelievable, Ray. If you think we've probably had these kinds of conversations for a decade, and very often we're saying to people, kind of stay stable, keep focused, stick to a strategy, don't be too despondent. And now we need to say the same thing, but maybe slightly in reverse is, things are getting better and things are starting to kind of pick up all around South Africa in many different ways. And it is good news, and we should be alive to that good news. I think, when you've been kind of disappointed for so long, on a political level and economic level, it often becomes very difficult to kind of just stop and pick your head up and look around and say, hang on, actually, there are things happening here which are positive. And, maybe just to kind of give you an idea, I spoke to two different CEOs of companies that operate in South Africa, listed companies. And both of them were saying just the fact that they don't have to spend the money on diesel to keep the generators going is going to cause an uptick in their profits. Now, that's not the only reason that their profits will be better. It's just one very obvious factor. And I know you were kind of saying tongue in cheek, just, touch wood, that it doesn't carry on or we don't get any load shedding. But the reality is this 100+ days is already a positive thing that's already baked into the numbers of companies that are operating in our country. And it's only one thing. If you take into account, the reduced transport costs, because now trucks and bakkies are not stuck in, gridlock traffic day after day, because actually not all traffic lights, but most of them are working better. And so we go. All of a sudden, costs are down, and revenue might also start to pick up. And I think just that alone, will have a positive impact. And the one thing we've got, Ray, is we've got world class, if you think the Springboks are world champions, we've got world champion management teams. If you look at, the kind of things they've had to deal with in this country for so long, the companies that are still standing, are still surviving, are phenomenally fit, really well-managed businesses. And we shouldn't forget that now.
Yeah, you're quite right in what you say. You really are quite right. So it's a little bit like a bear coming out of hibernation, or a little tortoise looking out from under his shell, looking left and right and going, okay, I can see sunshine now. What does this mean for investment? I mean, do we sort of cautiously start investing in South Africa? What do we do?
I think the first thing is to have a look at your mix of investments that you've got. So there will be people that, that have gone too far. They've possibly over allocated their money to international investments and under allocated to South Africa. Now that's been a one-way bet, which has worked well for them to now. And it's just maybe my first comment is to kind of remind them, or if they're old enough to remember, but to remind them what the early 2000s looked like. In the early 2000s, the rand started on a long period of strengthening. It got a lot stronger. The US market did nothing for a decade, and the JSE delivered fantastic returns. Now, I'm not fool enough to make a prediction, Ray, and say that that's exactly what's going to happen now. But what I am saying is that that set of conditions could be repeating themselves in some way in the next decade. And so if you're underinvested locally and you're overinvested overseas, especially if you live off your money, if you're a retired person, you could be feeling pain. So comment one is just check your balance. Check your balance of your local versus your global. More importantly, check your balance of cash versus stock market investments. It's very obvious to me that private investors, pension funds, and then actually normal businesses, and not just investment businesses, but all businesses in South Africa are horribly overexposed to cash. And it's been understandable. When you don't know what's going on, make sure that you've got a big allocation to cash to cover you, especially when you might need to buy generators or diesel or solar panels or whatever it is. But cash now is not going to be a good move. As you said, you've just had a guest telling you about the possibility that interest rates come down. And so falling interest rates are a wonderful thing for stock markets. As interest rates come down, that means shares go up. And if you're sitting on cash, you're missing out.
Yeah. Oh, gee whiz, there's a tip right there. A lovely, solid tip right there. But Warren, what worries me about this, I don't want to be a naysayer and I don't want to be a pessimist, but, I've been in the news business most of my life now, and I'm just a little bit worried that our GNU gets wobbly and we start fighting. I'm worried that Josienso Ramagopa didn't do his calculations right and load shedding comes back. We're just going to have to, I think, just also, like you say, just be a little bit cautious and watch out for that rainy day.
100%, right? So using the phrase it's really bugging me at the moment when we talk to people about, what's happening in South Africa, and they go, yes, but. And so I agree. It's been tough and it's certainly going to be bumpy. There is no way that you get a bunch of politicians who are all absolutely self-interested. That's my opinion, to kind of all agree and do everything for the greater good every single day for the next 5 years. That's dreaming. Yes. What I am saying is I think that this bunch collectively will do a heck of a lot better than the last bunch who possibly couldn't have done worse unless they'd started a coup or something. So all we need is for the current bunch of politicians to raise the benchmark slightly. And that cannot be hard. I mean, their previous competitors were really lousy. So all I'm asking people to do is maintain some perspective. But very importantly, I'm not saying bring back every cent that you had overseas, move all of the cash that you've got into shares and buy every small little company on the JSE that you can find. That would be the definition of insanity. What I'm saying is just get the structure right. So, for example, I think everybody needs a portion of their investments to be spread across South Africa and globally. And at worst, or at least you should have 25% of your assets invested overseas. And that's for people that have just enough money. They might not have enough to leave to their kids. The moment you've got enough money to kind of leave to children, you need to push that offshore allocation up to around 50%. And then for the ultra wealthy, those that might leave money to their grandchildren, that should go to 75%. So if you've got those as benchmarks, Ray, then what I'm saying is look at those benchmarks and compare that to what you have at the moment. And you might find people with 80 or 90% overseas, and that's too much. They should consider bringing back a portion, but please, not all of it.
In other words, get the balance right. Chatting to Warren Ingram, who's the co-founder of Galileo Capital and also personal financial advisor, talking about calm waters this time and where to put your money and what to do next.
The Money Show. Personal finance with Warren Ingram.
Right, Warren, talking about South Africa enjoying an unusual period of economic calm, and we've had no load shedding for more than 100 days. The GNU is doing pretty well at the moment, getting down to business. And you were talking just before the break about where to put your money, and you were saying put some overseas, but bring some over here as well. What about property? Where do we stand with investing in property?
I think for me, property is always needs to be divided into two types. So you get the physical property. So that's, you go and buy the buy-to-let flat, or you go and buy a little office building or something like that, or you get the property companies that trade on the stock exchange. So maybe to talk about the second group first, the property companies, they have had a phenomenally difficult time, Ray. I think COVID was really hard for office buildings, and I don't think they've actually recovered since then. And then you look at, just in general, the kind of retail market, shopping centers and the like, some have done well, but there are a lot that haven't. So the only thing that's really performed well are those huge big warehouses that you can see all over every big city, because we're all buying things online and getting them delivered to our houses. So the logistics side has done well. And then the property market's been very kind of particular, and there's been patches of blue sky, especially around the Western Cape and one or two other places around the country. But for a large part of the country, property has been tough. And if you're a homeowner in Joburg trying to sell your house, you'll know exactly what I mean. It's been phenomenally difficult to get any kind of value out of buying a house, or even, sorry, not buying, but selling a house.
Yeah.
So, having said all of that, one very big tailwind for all property investments will be falling interest rates. And it's very unlikely that we'll cut interest rates before the Americans do. And so, I mean, let's not make a prediction, but, it's possible that happens towards the end of this year or early next year. We start to see interest rates falling. And when interest rates fall, it means that those that have borrowed money to own property and to buy property, they get a bit of breathing room. And for people that are looking to buy, lower interest rates just makes property that much more affordable. So I think that's a good thing, Ray. And then the second thing will be that little thing called sentiment, the psychology and the willingness for us to take a bit of risk and for us to invest in the country. And when you've got load shedding and major economic depression, it's very hard to kind of be positive or, and look at anything and see the light. Where we are now, it becomes a little bit easier to see opportunities. And so I know I'm sitting on the fence a bit, but what I would say is if you're going to buy a physical property, you have to do your sums, you have to do your homework always, and you can bank on lower interest rates going forward. I think that's fairly certain. Just exactly when, we don't know. But then the possibility that the economy grows a little bit faster than it has is real. And if things start to go well, if government does start to deliver on some policies, the economy could grow even faster than anticipated, and that would be very good for property.
Yeah, absolutely. It really would be. All right, let's shift our gaze a little bit. How are other countries seeing us at the moment? We've got our GNU, we've got our load shedding being dealt with. Are you seeing a shift in sentiment on the markets with investors to our country, or is it still wait and see? Is it still too early?
Actually, about 2 Fridays ago, we got numbers that foreigners were the biggest buyers of South African bonds that we've seen in a very, very long time. So certainly in the bond market, there was a shift already in sentiment that investors are looking at the bonds in South Africa with a much more positive view. I don't think we're there yet on the JSE, but certainly, the sentiment from everything's down all the time to foreigners looking at us and saying, well, this looks interesting, it's worth watching. And you need to contrast what's going on in South Africa with what's going on around the world. And I'm not going to say for once, because it's happened before, but gee, Ray, if you look at the, US election that's coming up and you look at what a mess that is, look at what's happened in the UK with multiple prime ministers in a very short space of time. And, I mean, just contrast our election where we've got, we don't want to call it a coalition, but that's practically what it is. And look at the French. They can't even get their government going after they've had their national election. And they're in theory a mature democracy. So I think that, we're looking very good by comparison.
Right. So then the question is, how should people take advantage of the current stable environment? Warren, what would you do? Or what are you doing now?
I think starting point is don't just take a one one-way view on the rand and especially on the JSE. Look at the JSE with slightly more realism, and sometimes realism means don't be so optimistic. But in this case, I'm going the opposite and saying don't be so pessimistic. Look at the JSE and say, what could these companies do if they get some economic tailwinds? And I think that there are a lot of very cheap, well-managed businesses out there sitting on lots of cash that they can deploy to grow their businesses. So I think that the JSE is probably going to deliver some good returns in the next while, just based on the fact that it's so cheap now and it gets some help. So that's one thing. I certainly wouldn't be over-invested internationally if I'm generating income at retirement. So be careful of over-investing offshore. And then I definitely would be reducing my allocation to cash. I think, cash was a very good call over the last 5 or 6 years, but certainly I don't think we'll repeat that in the next 5 or 6 years. So reduce cash.
Yeah. Yeah. And then there's the question of gold. And I keep watching this gold price. And every time I do the money show, I get to do the figures. And the gold price just climbs and climbs and climbs. I would think that's still a great investment because I would think it's going to keep climbing.
I feel the same way about gold as some people feel about their favorite sports team. You're not.
I like the Springboks. I do.
And so, I don't like the English rugby team. So it's very hard for me to support the English team, and I can always support the Springboks. And it's a bit like gold. You decide you are or you're not. So I think my concern about gold is when you buy it and you hold it. And remember, we're talking about investing now. We're not talking about taking a speculative bet over a week or a month. And so when you're an investor, the ideal is to own an asset that will generate some income while you hold it. So, when you buy a property, hopefully it's generating rent. Even when you put your money in the bank, it's generating interest. When you buy a company, it's generating dividends. When you buy gold, it just sits there doing absolutely nothing. It doesn't even react with oxygen. So it just sits there and does nothing and possibly costs you money to store it. So what you need to make money out of gold is for other people to be more fearful about the state of the world than you, and that's why they'll pay you for the higher price than you paid for your gold. And that's the concern now is in the rest of the world, I can understand the fear levels are high and that's, it's possibly understandable. But what happens if things start to get a bit better and the world eases off a little bit, and especially interest rates go down again? Will everyone still be fearful and will they still pay even more for gold? And I'm not sure. I just don't know. I don't know that that's a good call.
Yeah, that's sound advice. Warren, I feel very sorry for those who have fixed their rates as well. There are those who do fix them, and then all of a sudden you turn around and you're seeing interest rates coming down. It's always such a gamble, isn't it?
I think in South Africa, I haven't seen many cases where it makes sense to fix interest rates on a mortgage, for example, because that interest rate that they want to charge you when you start the mortgage is so much higher than the current rates that it just doesn't make sense to me. So I think, in South Africa, a floating mortgage is always better. Internationally, the market's much more efficient and it moves much more quickly. But even there are people in the UK, for example, that will be facing a 10 times increase in their mortgage repayments in the next few months when their 2 and 5 year mortgages reset. And just think about that. You were paying £5,000 on your mortgage. Suddenly it's £50,000.
Wow.
That's a heck of a jump. So I think you're right. It's not a good call.
Yeah, crazy stuff. Warren Ingram, co-founder of Galileo Capital and also our personal financial advisor. And I said guru this evening. Thank you so much for coming on. It's been a fascinating chat this evening. Thank you.